Welcome back, everyone. Today's explainer is an absolutely fascinating one. We're rolling up our sleeves and deconstructing the explosive financial trajectory of a European biotech company called argenx. You might know them by their ticker ARGX. Over the next few minutes, we're going to look strictly at the data to understand the anatomy of this breakout. Specifically, we really want to answer one core question. Why exactly is argenx stock growing by 60%? And what on earth are the biological and financial engines making that possible?
To kick things off, I want you to imagine a scenario for a second. If I came to you with a company boasting $1.5 billion in quarterly product sales, a massive 31.6% earnings beat in its latest quarter, and a blistering 60% year-over-year growth rate, would you invest? I mean, it sounds exactly like a Silicon Valley tech giant, right? But no, this is actually an immunology company that is fundamentally redefining how we treat severe autoimmune diseases. Section 1, the 60% growth engine. Okay, let's dive into this.
Let's start with the financial engine that's powering this crazy growth, looking right at their staggering first half 2026 metrics. The massive headline here is 60.8%. That is argenx's year-over-year revenue growth for the first half of 2026. In just 6 months, they pulled in a colossal $2.85 billion in revenue. In the biotech world, finding any company operating at this scale that's still managing to grow revenues at over 60% is, well, it's incredibly rare.
But you know what's truly mind-blowing here? It's the relationship between their top and bottom lines. If we look at the jump from H1 2025 to H1 2026, revenue goes from $1.78 billion up to $2.85 billion. But follow that down to net income. It surges from $415 million to $838 million. So they didn't just grow sales, they literally doubled their actual net profit. This proves, without a doubt, that the company is demonstrating some massive operating leverage as they scale up.
That translates to a massive 101.9% surge in net income. As argenx expands its operations and pumps out more product, a larger and larger chunk of that revenue is flowing straight to the bottom line. This kind of record profitability is a huge reason why Wall Street has been paying such close attention lately.
So what exactly is driving all this cash? Well, it's their flagship drug, VYVGART. In the second quarter alone, VYVGART drove $1.52 billion in sales. And get this isn't just some random one-off spike. This marks an 18-quarter streak of relentless, totally uninterrupted sales expansion. For 18 consecutive quarters, they've beaten their previous benchmarks. It's just wild.
Section 2, the science of VYVGT.
Now, obviously, numbers on a spreadsheet only tell half the story, right? We really need to understand the biological engine making all these profits possible. And it all comes down to something called the FcRn receptor. You can think of this receptor like a giant recycling center in your body for IgG antibodies. In autoimmune diseases, these are the pathogenic antibodies that are essentially attacking the patient's own body. So argenx's drug, VYVGART, or if we're being scientific, ifgarticomod, acts as the first ever approved FcRn blocker. By blocking that recycling center, it essentially flushes the harmful antibodies right out of the system. It's a highly targeted, really elegant solution to some severe autoimmune conditions.
And because that biological mechanism is so fundamental, VYVGART isn't just a one-trick pony. It's actually currently approved for 3 blockbuster indications. First, generalized myasthenia gravis, or GMG, globally. Second, CIDP, which is also globally approved. And third, primary ITP in Japan. Across just these 3 indications, this single molecule is already impacting roughly 19,000 patients worldwide.
But here's the thing, 19,000 patients is literally just the starting line for them. Their Vision 2030 roadmap, championed by their new CEO Karen Massey, who took over back in May, outlines a massive goal. They want to treat 50,000 patients globally and secure 10 labeled indications by the end of the decade. They're systematically expanding this drug into new diseases, essentially treating it as an entire pipeline inside a single product.
Section 3, Pipeline Catalysts for 2026. Let's move to and see how this builds into the future. Because as we all know, the stock market is always forward-looking. We need to examine what's coming up. Looking at their calendar, there are 4 massive registrational readouts scheduled for 2026. These are the major events that promise to sustain this aggressive 60% growth momentum we've been talking about. We've got the ALKI-VIA trial from August, and PASSION and Advance Next coming in the 4th quarter, and the highly anticipated launch for seronegative GMG by the end of the year. Let's actually take a closer look at what just went down in August. On August 17th, argenx released the results from their Alkivia trial for myositis, and wow, it was a landmark success. The data showed a 15.4-point greater improvement over the placebo, which is highly statistically significant. But the real reason this matters so much is that this was specifically in the IMNM myositis subtype, a severe condition that previously had absolutely zero approved therapies. Zero. When this data dropped, validating their science in a completely new, untapped market, argenx shares climbed 10% almost instantly.
And honestly, VYVGART isn't their only iron in the fire right now. They're heavily prepping their second major molecule, empasiprubart. This is being positioned as their next big pipeline and a product blockbuster. It has a critical upcoming Q4 readout called Impassion for multifocal motor neuropathy, or MMN. If this readout comes back positive, it proves to the market that argenx isn't just a single drug company, which, as you can imagine, is a massive milestone for any biotech's valuation.
Section 4. Bull versus bear case.
Of course, we know every investment story has two sides, so let's impartially transition into the reality of the market here and weigh this incredible upside against the very real risks and valuation concerns. Right now, argenx is trading right around the $1,007 mark, carrying a forward PE ratio of about 35x for 2026. But look at this overwhelming Wall Street consensus. Out of 23 analysts, we have 13 rating it a strong buy, 5 saying it's a buy, 3 as a hold, and absolutely 0 sell ratings. The institutional conviction behind this 60% growth story is remarkably uniform across the board.
So the crucial thing here is understanding this massive contrast. The bull case points straight to those 18 quarters of growth, an average target price of $1,170, which implies an 18% upside from here, and high-end targets like TD Cowen's $1,353 based on that recent myositis success. But then you look at the bear case. Platforms like Simply Wall Street estimate a fair intrinsic value that is much, much lower, around $733. They argue that the high growth premium is already completely baked into the current price. Plus, the bears constantly point to the looming shadow of intense market competition.
Which naturally brings us to the key risks. The biggest headwind for them right now is intensifying FcRn competition. You have heavyweights like UCB with their drug rozanoliximab, as well as Johnson & Johnson and AstraZeneca, who are all aggressively moving into this exact space. Furthermore, when you're trading at a 35x multiple, any pipeline execution misses, regulatory FDI delays, or even manufacturing constraints as they try to scale could trigger a severe stock correction. At these levels, the market pretty much expects absolute perfection to justify the price tag.
Just real quick, I also want to touch on their ESG profile for those of you who factor this into your analysis. argenx carries an overall score of 24.86, putting them in the medium risk profile category. The highest component driving this is the social score at 15.6, which really just reflects the profound positive impact the company has by actively treating thousands of patients dealing with these debilitating autoimmune diseases.
So, that leaves us with the ultimate dilemma of investing in a premium growth story. Can argenx actually sustain its 60% revenue growth engine and successfully launch its next round of blockbusters? Or is all of this extraordinary potential already fully priced into the stock today? I want to leave you pondering that provocative question. The data definitely shows an undeniable track record of scientific and financial execution, but as we all know, the future always comes with a price tag. Thank you so much for joining me for this explainer. Keep analyzing and keep learning.